Hello and welcome. Good morning. Get tuned into Market Cafe. I'm Ankita Saxena, and in the next 1 hour, we'll take you through what transpired in the global markets. And of course, the news coming in on the geopolitical front and all the cues that you need to watch out for before the start of D Street today. But first up, let's take stock of how the US markets shaped up. Well, we do see a sea of red coming in as far as Wall Street is concerned. Dow Jones ended the day 166 points down, 0.3% cut coming in on the Dow Jones. S&P 500 edged lower by 0.8%, and Nasdaq saw the sharpest fall of 1.4% or 36 points down, coming in on Nasdaq Composite. Now remember, there are a couple of stocks, the tech stocks like Nvidia and Microsoft that lost more than 2% on Nasdaq. We also have big artificial intelligence infrastructure names like Botcom, Oracle, and Micron Technology also closed in the red. Now, software stocks also slid like ServiceNow and Salesforce that dropped nearly 7% in the trading session, and the tech sector was the worst performer, in the S&P. That was worse than the S&P that was down to odd percent. So Nasdaq Composite saw a massive decline coming in, and because of all these tech stocks that I mentioned that traded with cuts. So Nasdaq Composite was down almost 1.5 odd percent. But as far as the futures are concerned, stock futures, S&P 500, that's up less than 0.1%. Very flat moves coming in right now. Little change there, but Nasdaq Composite, that's down less than 0.1%. Again, very flat moves coming in, and Dow Jones has added 33 odd points. So it's a mixed futures call that's coming in, but very, very flat moves as of now. But yesterday we did see Wall Street that ended the day in the negative. But let's talk about the commodities market. Now, the oil extended gains as the geopolitical tensions are resurfaced. OPEC Plus expects oil demand to gradually pick up. And a couple of other things that transpired that led to that rise. It edged higher after US also shut down, an Iranian drone approaching a US aircraft carrier, and amid, the armed boats approaching a US flagged vessel in the Strait of Hormuz, stoking concerns that talks amid, aimed at de-escalating US-Iran tensions could be disrupted because of this. And on the back of that, we did see oil that saw a jump. As of now, we do see Brent crude that's ticked up 1%. It's sitting at $68.10 a barrel, and WTI is up 1.3%, sitting at $64.02 a barrel. So that's where Brent and WTI is at on the back of that news. That has stoked fear. But let's talk about gold also. Gold is up 2.6%. In fact, it has crossed the $5,000 per ounce mark. In fact, it is sitting at 5,064.80 is where gold is sitting at, an uptick of 2.6%, and silver is up in a way 4.3%. Now remember, we have seen a considerable correction in gold and silver prices in the last 2 days, but right now, as we see, there is a rebound that's coming in on both the precious metals. So silver is sitting at 87.20 as of now. But that's how the commodity market is shaping up, an uptick coming in oil and precious metals for now. But let's talk about the Federal Reserve Governor Stephen Mirren, who has resigned from his White House role as chair of the Council of Economic Advisors. Now, Mirren has been on leave from the CEA since joining the Federal Reserve in September. A consistent dissenter, Mirren pushed for aggressive rate cuts, voting against the Fed's latest hold decision. His exit sharpens focus on the growing policy rifts inside the Fed. Investor Ray Dalio warns that the world is on the brink of a capital war. Speaking at the World Government Summit in Dubai, Dalio said that money is increasingly being weaponized through tariffs, sanctions, capital controls, and debt leverage. He flagged rising fears on both sides of the Atlantic, with Europe worried about the sanctions and the US anxious about capital access. Dalio says that central banks and sovereign funds are already preparing for capital controls and calls gold the safest hedge. Shares of advanced micro devices slid up to 8% in the extended trade despite a strong Q4 beat. AMD posted earnings and revenue well ahead of the estimates, but its Q1 revenue guidance, while above consensus, fell short of the elevated AI-fueled expectations. Investors were hoping for a bigger upside as the hyperscalers ramp AI spendings. CEO Lisa Su said AI GPU ramps remain on track for the second half with strong momentum in the data center and server CPUs. And Walmart has become the first retailer ever to hit a $1 trillion market value, joining a club long dominated by the big tech names like Nvidia and Alphabet. Shares are up 26% in a year, powered by aggressive AI-led supply chain automation, rapid delivery, and a booming online marketplace. Walmart now boasts 15 straight quarters of same-store sales beats, a $4 billion ad business, and was added to Nasdaq 100 last month. And the US military says it shot down an Iranian drone that aggressively approached the US Abraham Lincoln in the West Asia. Hours later, Iranian forces harassed a US merchant vessel in the Strait of Hormuz, threatening to board it, according to the US Central Command. The incidents come amid elevated tensions as Donald Trump weighs options on Iran. The White House says diplomacy remains the first choice, but force stays on the table. And well, hours after the major trade deal between US and India that went through, here's what Finance Minister Nirmala Sitharaman said when asked about the trade deal details. Let's listen in.
All these months, in fact years, hasn't Prime Minister Modi taken every decision keeping India's interest top of the priority? He has very clearly chosen India's interest on the top of anything else. Even at a time when war was escalating, even at a time when sanctions were being imposed, we kept India's interest at the top, which is what he'll do every time. I think the people of India trust Prime Minister Modi. You can ask questions, but I'm sure you will get the reply anywhere you ask, that the Indian interest will never be compromised by Prime Minister Modi.
And while the Finance Minister, in an exclusive conversation with Group Editor Navika Kumar, spoke on the impact of the STD on India as well. Let's listen in.
The correction that I did by raising the STT on futures and options is a correction which was much needed. We've had people calling us saying people are losing money heavily. It was not just anecdotal. There are studies to show how 90% of the people who were participating in futures and options market were losing heavily, 90%. And therefore, to deter that,
the speculative forces.
Yes, many of the Hindi newspapers have reported that is exactly where the satta operations happen. And therefore, we've raised it a little bit, not with revenue consideration, but clearly making sure that that deters people from going.
All right, that's the clarification coming in on raising of the STT by the Finance Minister. But let's slip into a short break. After the break, we'll get you more of all the cues to keep on your radar before the start of B Street today. Now, let's take stock of how the Asian markets have opened up right now. Asian markets are trading pretty mixed, but the interesting thing to note here is the Nikkei index that is trading with cuts of almost 417 points, 0.8% downtick that's coming in on the Nikkei. That's seeing the sharpest fall. And remember, all the tech stocks are getting affected. Now remember, even on Wall Street, Nasdaq saw the sharpest fall, and it was the tech stocks that saw a fall, and that has had a ripple effect on Nikkei as well. And tech stocks are seeing a dropping in the trade. They are the biggest drags. Chip equipment maker Lesser Tech is down almost 7%. Game maker Konami Group is down 5.8%, and Japanese semiconductor equipment powerhouse Tokyo Electron is down 3.2%. So the entire tech basket is dragging the Nikkei down, which is trading with cuts of more than 0.5% right now. But besides that, we have Shanghai. That's very, very flat. It's in the red, trading with cuts of 4 odd points, but nonetheless trading in the red. We also have Hang Seng Index that is trading in the red, down almost 90 odd points. But besides that, we have Kospi that is trading up 0.7%, and S&P ASX 200 that's trading with gains of just 2 points. So flat moves coming there, but largely it's a negative day that is coming in on the Asian markets. Let's pull up the charts for GIFT Nifty also to show where Nifty perhaps could start the day. That is very, very flat right now in the negative, but very flat start is what we can expect. Now remember, yesterday we saw a gap up start, and then we had a sideways market. So today we expect a very muted start, continuing with the very sideways moves that we saw coming in towards the end of the day. So that's how largely the Asian market is shaping up.
Well, yes, so that's how the Asian market is shaping up this morning, and we've seen a lot of action in the IT stocks overnight, not only in the Asian markets this morning, but in the US markets yesterday, and all eyes will be on IT sector in India as well today. But shifting focus to all the stocks that will be in focus, and first up, let's put the spotlight on the earnings candidates then, and Bajaj Finance, that one reported its numbers, and it was largely in line with what the street was working with. Now remember, results were in line, but PAT was impacted on account of one-offs that we saw that weighed heavy on profitability this time around. And this was on account of labor code changes and ECL provisions that the company did in the quarter gone by. Income, however, improved on a sequential basis. PCR increased due to rise in credit cost across stages, and improvement was seen in cost of funding as well. So that's Bajaj Finance for you, and that one reported numbers that were largely in line with what the street was working with. Let's also talk about Pidilite. Again, in line set of numbers. Revenue has seen an increase of about 10% YOY, but EBITDA margins, they have expanded a tad bit. For the quarter gone by, they came in at 24.1% versus 23.7% that the company reported same time last year. But largely in line set of numbers is what Pidilite reported in the third quarter. Shifting focus to Triveni Turbine then, and mixed set of numbers because revenue is higher than what the street was working with, but on the flip side, EBITDA margins have been weaker than street expectations. So revenue is up 24% YOY, but EBITDA margins have contracted a tad bit to come in at 21.5% versus 21.7% that the company reported same time last year. Nazara Technologies, again mixed set, where revenue is down a whopping 24% on a year-on-year basis. Of course, largely in line with what the street was working with, but margins have in fact risen. They've come in at 16.7%, so that's a solid expansion of about 900 basis points. Alkyl Amine Chemicals, meanwhile, has reported weak set of numbers. Top line has seen a decline of about 5% YOY. Sheela Foam, on the flip side, has reported very strong set of numbers. Revenue is up 11% and margins have expanded to 10.6% versus 9.1% that the company reported same time last year. So yes, a whole host of counters that you need to keep an eye out on, especially on the back of earnings for the quarter gone by. But Rabinder is also joining us to take us through some other set of stocks and news, the stocks that will be in focus on the back of other than earnings. Rabinder, take us through the list.
Yes, on the back of order win, LNC India can be in focus, where company's subsidiary NLC India Renewable has secured a major contract from the SCCI, and this is to set up a 600 megawatt solar project integrated with a 300 megawatt and 1800 megawatt ESS to supply power for the 25 years. So back of these stocks can be in focus. Moving to next, Varroc Engineering can be in focus, where company has secured a strategic 6-year contract with a global EV OEM to supply AC bidirectional wall chargers, and this has an estimated peak annual revenue of rupees 439 crore. NBCC India can be in focus on the back of order win, where company has secured a work order total rupees 271.3 crore from the ICMAI. Irida can be in focus, where company's board meet is scheduled to be held on 6 Feb 2026 to approve a fundraising via QIP up to rupees 2,994 crore. SCI can be focused, where company has signed a multi-party MOU with Concur, JNPA and several port authorities to collaborate on acquiring and operating container vessel and asset for end-to-end EXIM and coastal logistics. So back of this, SCI can be in focus. Keep an eye on PFC and REC, where company has clarified that it will hold a board meeting to deliberate on the Union Budget 2026 proposal to restructure PFC and its subsidiary REC to achieve scale and efficiency. From the real estate pack, DLF can be in focus, where company has signed an agreement to sell 17.75 acres of land to Gangapurna project, and land sale to Gangapurna project is for approximately 260 crore. NTPC Green Energy can be in focus, where a company has informed that 125 megawatt Bhadla solar PV project second phase has become commercial. So back of this stocks can be in focus. And lastly, keep an eye on Lenskart, where company's IPO lock-in will end today for 2% of its equity. So back of this, Lenskart can be in focus.
All right. Thank you so much, Rabinder, for joining in. And those are the stocks we will be watching out for before the start of T Street. But with that, it's time for us to slip into a short break. Don't go anywhere. We'll be right back.
Indian equities yesterday. But after the historic announcement made by US President Donald Trump on the trade deal with India, India's Commerce Minister Piyush Goyal confirmed yesterday that the agreement is in its final stages of detailing, with a joint India-US statement that is expected shortly. He described it as a historic step under Prime Minister Narendra Modi's leadership that prioritizes national interest and will benefit entrepreneurs, farmers, MSMEs and skilled workers. The trade deal announcement had yesterday sparked a relief rally for Indian equity markets, boosting exporter sentiment amid broader global trade shifts, including India's recent landmark pact with the European Union. Details remain limited, with both sides indicating that this could be an initial phase of deeper cooperation between the two major economies. Let's go across and listen in to what Commerce Minister Piyush Goyal had to say.
एक बड़ा मजबूत भारत के भविष्य को चार चांद लगाने वाला ट्रेड डील माननीय प्रधानमंत्री नरेंद्र मोदी जी के नेतृत्व में कल रात फाइनलाइज किया गया है। मैं 140 करोड़ देशवासियों की तरफ से माननीय प्रधानमंत्री नरेंद्र मोदी जी का धन्यवाद करता हूं और आप सभी को बधाई देता हूं, क्योंकि ये वास्तव में भारत की अर्थव्यवस्था को, भारत के 140 करोड़ नागरिकों को, हर गरीब, किसान, मछुआरा, गांव में रहने वाला युवा, युवती, हमारी बहनें, महिलाएं, सभी के लिए ढेर सारे अवसर लाने वाला ट्रेड डील माननीय प्रधानमंत्री जी ने कल तय किया। साधारणतः तो हम पार्लियामेंट में बोलना चाहते थे इसके बारे में, किस प्रकार से माननीय प्रधानमंत्री हमेशा हमारे किसानों के लिए, पशुपालन के साथ जुड़े हुए हमारे भाई बहनों के लिए, डेयरी सेक्टर के लिए लगातार चिंतित रहते हैं, उनके हितों की संरक्षण करते हैं। यहां तक कि हमने देखा इतना बड़ा ट्रेड डील, रीजनल कॉम्प्रिहेंसिव इकोनॉमिक पार्टनरशिप आरसेप, जिसमें कांग्रेस ने भारत को झोंक दिया था 2011-12 में, एक प्रकार से चाइना के साथ एफटीए करने का पाप राहुल गांधी ने किया था, उससे भी माननीय प्रधानमंत्री जी ने देश को बचाया और आरसेप से जुड़ने से इनकार कर दिया, जिसके बाद पूरे देश में राहत की सब चारों ओर से सूचना आई थी। माननीय प्रधानमंत्री नरेंद्र मोदी जी ने हमेशा एग्रीकल्चर और डेयरी, इन दोनों सेक्टर्स को संभाला है, उनके हितों को संभाला है और इस क्षेत्र में लोगों को उज्जवल भविष्य मिले और मौके मिले, आमदनी बढ़े, उसके लिए लगातार काम किया है।
And well, as far as the trade deal is concerned, White House Press Secretary Caroline Leavitt also claimed that India has committed to ending its purchases of Russian oil and will instead source crude oil from the United States, potentially from Venezuela, under the newly announced trade agreement between the two countries. Let's listen in.
A very good relationship. India committed to not only no longer purchasing Russian oil, but buying oil from the United States, also perhaps from Venezuela too, which we know will now have a direct benefit on the United States and the American people. And in addition to that, Prime Minister Modi committed to $500 billion of investments into the United States, including for transportation, for energy, and for agricultural products as well. So this is another great trade deal.
And here's what experts have to say about the trade deal announced by US President Donald Trump and the developments ever since the announcement. Listen in.
I'd like to say that the contention around tariffs has just sucked up too much of the oxygen in this discourse. And it's good to get that behind us from both countries. Even while many bilateral conversations were going on, the fact that there was a 50% overhang and not a very friendly tone was definitely a big setback. Hopefully, with this, we move forward.
All right, let's also listen in to Ambassador Atul Keshup and what he had to say about the trade deal.
Minister Jaishankar is here in Washington today. He's meeting Secretary Rubio in a couple of hours. There may be a joint statement that comes out between the U.S. and India in the next couple of days. I think we have to scrutinize that to see what implications there are. But look, what's happened here is that essentially a one-year pause button in U.S.-India relations has been stopped and a play button has begun. Because whenever you have a very complex negotiation between two governments, everything sort of goes on hold, waiting to see what the outcome will be. And every single possible dimension may get contributed to that deal. So then nothing can really move forward with a great deal of gusto. Now I think you're going to see many things go forward. We're going to see greater cooperation on critical minerals. Minister Jaishankar is here for that summit tomorrow on critical minerals. You'll see, I think, more work between the U.S. and India on the nuclear renaissance, aerospace and defense. Energy is going to be huge, both nuclear and oil and gas and coal and other things, agriculture. I see a very great deal of positive energy coming in U.S.-India. As I said, the play button has been hit.
All right, shifting focus then, sources say that the government and the agreement covers import of data center equipments, advanced AI chips and civil nuclear cooperation while safeguarding India's economic interests. Sumita Karir, my colleague, is now joining us with more details on this.
Well, that's a very important statement that came in from Minister Piyush Goyal, and he essentially stated that the deal has kept national interest in mind. In fact, ET now also spoke to government officials, and government officials clarified about some of the important aspects of this announcement that was made by President Donald Trump and Prime Minister Narendra Modi. In fact, as far as Donald Trump's claim of India agreeing to $500 billion worth of purchases in technology and several other sectors is concerned, well, this $500 billion worth of purchases is going to be spread across 5 years. And the intent is essentially to meet India's domestic demands in sectors, for example, a nuclear cooperation. There's also going to be importing of equipment that's related to data centers, which will fulfill the needs related to data center infrastructure in the country. And other than that, there will also be increased imports of advanced AI chips, which India needs at this point in time. In fact, we also sought clarification on Section 232 tariffs. In fact, no relief has been granted as part of the Section 232 tariffs, which apply to semiconductor and related areas. In fact, these tariffs are applicable globally to countries, is what we were given to understand. The third point is essentially about the fact that what happens next. Well, we are given to understand that since negotiations are continuing, because there is not clarity is not emerging on whether this is the first tranche of the bilateral trade agreement or if this is a package deal. So negotiations are continuing, and both the sides are looking at announcing a joint statement, releasing a joint statement, which should be done over the next couple of days. Other than that, we did ask the government source about whether India is looking at a binding section as far as this deal is concerned, given the fact that Donald Trump has faltered. He has gone back on the deals that he struck with several countries, to which we were given to understand that India's national interests will be kept in mind. On the issue of oil purchases, well, we were told that India has consistently maintained that purchases are driven by a market dynamic. So all eyes are on the next couple of days when the joint statement essentially releases, and it is then that we will get to know more details about what the trade deal actually includes.
Also, the External Affairs Minister S. Jaishankar met the U.S. Treasury Secretary Scott Bessent in Washington, holding wide-ranging talks on India-U.S. strategic partnership. Discussions cover trade, energy, nuclear cooperation, defense, critical minerals and technology, alongside regional and global issues. Now, both sides have agreed to early meetings of the key mechanisms to push forward shared economic and strategic priorities.
And CII President Rajiv Memani says that India-US trade deal clears the trading cloud, reviving momentum in labor-intensive sectors like textile and fisheries. He says impacted sectors will now see trade pick up, sentiment improve and jobs return. Let's go across and listen in to what he had to say.
India and US, at least for India, US is the largest trading partner. US is also one of the largest economies, and they also are probably one of the largest importers in the world and one of the largest trade partners for many countries. So I think it opens a very large opportunity which was partly getting blocked. Not every sector was getting blocked, but some of the sectors were getting impacted because of the 50% tariff. So I would say it's a positive development, especially for labor-intensive sectors in India, because if you look at leather, textiles, fisheries, auto components, engineering exports, these were the sectors that were majorly impacted. And I think now with the 18% rate coming, which is pretty competitive as compared to the other countries, in fact better than most of the other countries that we compete with for these products. So I would say it brings the momentum back for trade in these categories. Now for the categories that were not impacted, like electronics, pharma and others, in any case the trade was growing and growing very well. So I think that will probably continue. And in these sectors where I think it had started showing signs of dipping in the last few months, hopefully the momentum will be back. It's very positive because these are labor-intensive sectors. They employ a lot of people. So I think some of these factories were struggling. So hopefully, I think they will get the energy back. The other important thing when I look at these trade deals is that they offer a platform. So what happens is, one are things that are directly impacted, but broadly it gives you a platform, much wider platform to engage. India and US are natural trading partners. They're the largest, most vibrant democracies. So I think somewhere I think because of this, the engagement at a business to business level, minus maybe AI, technology and others, and GCCs and others, I think had slowed down. I have a feeling that will pick up again, which is positive both from a trade standpoint and an investment standpoint. And third, there was, for whatever reason, whilst the impact was not that significant, in any interactions that you had with either global investors, media, markets and others, this always used to come as one of those sort of dark clouds that are there. So I think at least to that extent, even from a perception standpoint, I think this clearing away is a positive sign. Now, I hopefully, over the next 12 months, India can do a more comprehensive trade agreement with the US. I think that probably will also signal positively for India.
So recently we also had the free trade agreement with the EU, and now we have had the trade deal with USA, which is one of the first times that the Indian economy has had two robust, agreements with these two jurisdictions. So do you think that the manufacturing and the, activity related to coming up with more, even tech transfer is going to get more of a boom?
Yeah, I think what has been really striking in the last 12 to 18 months is the number of trade deals that India has done. In some cases, they're FTAs. So if you start with Australia, New Zealand, then strengthening our ties with Middle East, then we did with EFTA, UK. We've signed something with Europe. Obviously, it has to, both UK and Europe have to go through the process of approval with parliaments and everything else. We've signed, at least from a tariff standpoint, there's broader understanding with the US. The full trade agreement still has to be negotiated. And hopefully, as I said, that'll get done. So definitely it creates, from a supply chain standpoint, I think India becomes, was in the radar, but I think that gets reinforced much more strongly. I think the strength of the Indian domestic economy is now visible to a lot of people. India's competitiveness, thanks to the reforms and otherwise also, is getting better and better. And India is viewed as a reliable, trusted trading partner. So if you overlay FTA over that, I think definitely it creates more opportunity for manufacturing, in India. It creates greater opportunity, as you rightly said, for technology transfers, and also just from an overall economic trade standpoint. I think it's a very positive development, even for investment.
That's the word coming in from Rajiv Memani of CII. But shifting focus then, and in an exclusive conversation with ET Now, my colleague Sumita also caught up with Vijay Kumar, Secretary Minister of Ports, on his overview of the budget and its impact on India's shipping industry. Let's listen in.
Based on number of studies, number of discussions and cost comparisons, roughly per container cost differential comes in the range of about $500. So the exact figure is yet to be finalized. We are still working out, still refining it. And I think we should be ready to launch the scheme within next 2 to 3 months.
So my second question is related to BCD reduction that has come in the budget for multiple sectors, whether it's related to electronics, the nuclear sector, and even the solar sector. Now, I'm pretty sure that exporters must have come to you given the kind of trade disruptions that we've seen over the past couple of months. How do you think these measures are going to sort of reduce the compliance burden on exporters?
So basically, a number of products, a number of inputs which are used as a part of a maritime ecosystem. So number of concessions have been given, number of concessions have been extended, so which will help in building a robust ecosystem for maritime building of ships, for maritime components also, and yeah.
Right. So what is your plan to sort of change customs processes to aid exporters, and what are the timelines that you're looking at?
So basically, we've got a very ambitious program called One Nation, One Document, One Nation, One Process, under which all our ports are working together with customs, with immigration authorities to streamline the processes. Already number of achievements have been made. We have achieved about reduction in documentation of about 50%. We have reduced number of transactions also. So I think a lot of progress is already being made.
All right, with that, it's time for us to slip into a short break. Don't go anywhere. We'll be right back.
Rashmi.
Trends Q3 earnings after the company gave a mixed update in terms of the revenue deceleration continuing, but the store addition for Westside and Zudio continued to look strong. That was their update. Let's understand what these numbers could look like when the earnings do come out on a standalone year-on-year basis. The revenue is expected to be slightly higher than what the management had indicated in its update, an uptick of 18%. EBITDA is expected to go up by 21%. Net profit is expected to see healthy growth of 16.2%. And margins, surprisingly, this time around, we're expecting to see a nominal about a 40 bips hike coming in on the margins. 18.9% compared to 18.5% is something that we're expecting to see the margin figure to come to. When it comes to store openings in Q3, 17 studios are expected to be added for Westside, 48 for Zudio, taking the 9-month total count to 30 for Westside and 89 additions for Zudio. So the key expectations when the numbers do come out is going to be store addition is expected to aid revenue this time around. The revenue per square foot is expected to decline 11% on a year-on-year basis. Area growth of 36% year-on-year, driven by addition of larger size stores, and revenue growth is expected to rather lag area growth due to the cannibalization of revenues of older stores by newer stores. The RFID related cost savings and employee costs may prove to be incrementally material to margins despite the weak same store sales growth that we're expecting to see. So yes, margins, that's the reason why margins could do well in Q3. But talking about the revenue deceleration, back in Q3 FY25 revenue growth for Trent was 40%. This time around, based on the update that the management has given, it's a 15% year-on-year growth. So that deceleration trend for revenue for Trent continues, and all eyes are going to be on that. Other than that, key factors to watch out for when the numbers do come out is going to be the same store sales growth number, demand outlook in metro, tier 2, 3 cities, cannibalization, if at all, that we're seeing in Zudio, because some brokerages believe that multiple Zudio stores in the same pin code are leading to cannibalization. Outlook on festive season and store expansion guidance is going to be something important to watch out for. So yes, watch out for Trent. Expecting a decent set of numbers, but there are going to be some internal metrics to watch out for. Well, yes, so all eyes will be on Trent, which will be reporting its numbers later today. But shifting focus to Bajaj Finance then, and that one reported its numbers yesterday post-market hours, and it was a steady third quarter for Bajaj Finance for the quarter gone by. Asset quality has improved, and net interest income growth was seen in the quarter ended 31st December. Mithali, my colleague, is now joining us with the earnings prime print and some con call takeaways. Mithali?
Yeah, so the company reported largely inline numbers with their operating performance holding up largely, while the profitability it was impacted by mostly one-off charges. The net interest income there we saw an increase of around 21% on a yearly basis, with fees income it jumped a strong 30%, supporting a 19% growth in their pre-provisioning operating profit. Also, the AUM growth it remained healthy at 22% of growth. However, higher than expected credit costs weighed on the earnings. The impairments they surged nearly 60%, driven by an accelerated ECL provisioning of 1,406 crore rupees, following the tighter loss given default norms across the businesses. Also, the profit after tax it declined 6% yearly, because it was impacted by a one-time charge of 265 crore rupees of one-time labor code gratuity liabilities. On the positive side, if you see, the asset quality of the company it has improved, and also the GNP and NNPA ratios inching lower, PCR rising to 61%, and the cost of funds that also eased down a bit in this quarter. Also, an exceptional gain of around 1,461 crore was reported from the Bajaj Housing Finance stake sale by the company that provided support at the standalone level. Overall, a quarter that was stable operationally, but earnings that were dented by the exceptional items. Talking about the brokerages, there we are seeing a mixed review. Morgan Stanley, it maintains an overweight stance, target price set at 1,195 rupees, citing strong adjusted earnings and also easing stress. While Citi, it stays neutral for the Bajaj Finance, and the target price that they have given is 1,090 rupees, flagging the one-off hits that the company posed in Q3, and also slower near-term growth despite the stable asset quality. That is what Citi is saying. So overall, a steady set of numbers impacted by the profitability that was impacted by the one-off charges. That was something to look out for.
All right, Mithali, thank you so much for giving us those details. But let's go across and hear what the Finance Minister Nirmala Sitharaman said when asked about the trade deal details. Let's listen in.
All these months, in fact years, hasn't Prime Minister Modi taken every decision keeping India's interest top of the priority? He has very clearly chosen India's interest on the top of anything else. Even at a time when war was escalating, even at a time when sanctions were being imposed, he kept India's interest at the top, which is what he'll do every time. I think the people of India trust Prime Minister Modi. You can ask questions, but I'm sure you will get the reply anywhere you ask, that the Indian interest will never be compromised by Prime Minister Modi.
And that's the word coming in from Finance Minister Nirmala Sitharaman. But here's a programming update for you. Bringing the budget discussions on ground, ET Now is hosting the India Investment Summit in Mumbai this Friday. Thought leaders, visionaries, policymakers, investors, MSMEs and innovators will unravel the Union Budget of 2026. They will analyze its impact and chart country's economic direction for the year ahead. The summit puts the spotlight on India's BFSI sector, which is at a pivotal moment between tariffs, currency valuations, Union Budget implications and forthcoming financial year. Tune into ET Now India Investment Summit this Friday.
All right, with that, it's curtains done in this edition of Market Cafe. Ashish and I will take a leave. Thank you so much for tuning in. Don't go anywhere. The market takes market action forward.